Hello, good morning. I trust you guys can hear me. Let me welcome us to our morning market review. My apologies for starting a few minutes behind it because I was having some network issues. You know how the network is right now. So sorry about that. So we're starting right now. So once again, good morning. A little sound check here. Please get to the chat room. Let me know if you can hear me, guys. I should just walk by faith. Walk by faith. I believe you can hear me. So if you can hear me, this is our morning market review. We do this every trading day, Monday to Friday. It's a one solid or on how you can drive the market profitably. My name is Emmanuel. I'm chief from the beautiful city of Port Harcourt. Port Harcourt is very fine. Just recently this morning. I want to believe your own area is also fine. Good. So we're starting right now, just like we always do. Today is Thursday. a very wonderful trading day. So I want to believe Monday to Wednesday yesterday, you were able to navigate the market profitably, right? One of the ways you navigate the market profitably is to go ahead and take a trade, take your trade when you see your signal. Okay, when you see signal on the market, I mean, you are trading with a particular signal. It can be moving average, it can be Bollinger Band, it can be market structure, break of structure, retest of structure, support and resistance. So whenever all of these things are triggered on the market, you go ahead and place your trade without any fear. Then of course you have to put stop loss and take profit on that trade. I hope you have been trading like that, right? Trading like that will always give you what we call net profit, right? Net profit. So guys, I think we'll start right now. I want to believe we are all good. So I will be sharing my screen with you guys real quick right now. So let me share my screen so that you can see my screen. So I would like to start from fundamental analysis. Let's look at what the fundamentals are telling us. So we may want to look at several websites. This is FX Street. So there are several news here, FX News, foreign exchange news that you look at and you can tell what is affecting the global economy. So as a trader, you want to always look at these websites, right? It will help you. So if you're hearing this one for the first time, welcome to the party. Welcome to the party. So this is one website we normally use, fsstreet.com. So you can see it's still trying to load, right? So network has been an issue. Then we also use investing.com. So from time to time, don't allow 1 week or days to pass you without checking this website, right? So you can see European stock edge higher, PMI, Purchasing Managers Index, and quarterly earnings in focus. So that is what the reason behind those stock going higher. So then, of course, Forest Factory. Forest Factory, the simplest of all of them, well-arranged calendar news. So once you go to forestfactory.com, it launches you to this path, right? So remember PMI in view from what we saw on FS Street, right? So PMI in view, so that means they're looking at for PMI, right? So if you watch carefully, you will see looked at Forest Factory, we looked at investing.com, we looked at FS Street rather, look at investing.com, and this is Forest Factory, right? So this is the news for today. So if you want to see the news for the whole of the week, you may want to So if you want to see the news for the whole of the week, you may want to click on this word calendar. So if you click on this word calendar, then it shows you the news for the whole of the week. So just go ahead and click on that word calendar, please. So if you click on this word calendar, it shows you the news for the whole of the week. So let's look at this is Thursday, and of course this will be Friday. So by Friday we'll be having just retail sales from Canada. Then for today it's like what I normally call it, World PMI Day. So the market is going to rock real time, right? So the first we're going to see is 8:15, right? 8:15. You guys can see it, right? 8:15. We have the French flash manufacturing PMI, that is Purchasing Managers Index, right? So it's usually not, it's a high impact news, as you can see. So the red means high impact news, right? Then of course the result will be out. So once this result is greater than the forecast, right? The actual greater than forecast, or the result here is above 50. Let's check our chart. Once the result is above 50, then you will see the market rocking to the upside. So that's for Euro USD, right? So once that result is above 50, see the market rocking to the upside. So So looking at the results again, this is one issue with Forex Factory. It keeps showing pending. So let's refresh. It's already 8:15. So the result should be there. So the results are out, right? As you can see, it's marked red. That means less than the forecast, right? Less than the forecast. Less than the forecast, and of course, it's less than 50 also. So that's the bad news for the euro. So euro is already weakening compared to the dollar on euro USD chart. So this will show further decline, right? This will show further decline. So this is the chart here. Okay, you guys cannot see my screen. So that result is actually out. So that means if you already have a sell on euro USD, your trade should still be open, right? So one of the ways you can utilize the news is on an existing trade and also for a new trade. On an existing trade, if the news is bad like this and you have a sell, right? Or let's say you are selling the euro across the financial markets. You understand what I mean, right? I mean something like euro GBP. You are placing this, you have a sell there. Something like euro USD, right? You have a buy there. So sorry, sell there on euro USD also. So it means if you're selling the euro, the news is bad for the euro. So it means your trade should still, you can still afford to leave your trade open. Okay. But on the contrary, if you are buying the euro, let's say you're buying euro in euro USD, then of course that means you place a buy on euro USD. I'm sure you're already not seeing some negative, so I think it will be time for you to cut short the losses. Guys, I don't know if I'm communicating. So also by 8:30, we have the German flash manufacturing PMI. So this particular one is from France, right? So the one we just had 8:15 is from France. 15 minutes after, we have the one from Germany, right? So most likely, they just come and mix or even bad also for the UK. Then of course by 9:30 we move to the UK, right? So the UK will be having their PMI, both from the manufacturing sector, checking out what is happening in the manufacturing sector, whether they are doing well over there, whether manufacturing has good conditions for it. Then, of course, we have also from the service industry. So, from the manufacturing industry, service industry, we're expecting this news from the UK, right? So, that will be good trading GBP. Then, also by 1:30 today, we are having the unemployment claims. Unemployment claims, those filing for unemployment benefits in the US, right? Unemployment claims. So, next week Friday we'll be having NFP. So unemployment claims should also be a pointer of what NFP will most likely look like. Okay. So then for today also we have a monetary policy hearing from the UK. Then by 2:45 we have the PMI from the US. In fact, today is just PMI day across Europe and also in the US. Then we have by 8:45 p.m. we have the central bank governor, that means the Bank of England there in the UK, Governor Bailey making a speech there. Then of course that will be that will be a wrap for today, right? For the news, Thursday, 24th October. So having said this, so let's move straight to the chart so that we can look at other instruments and do some technical analysis. Okay. Please, if you have questions, you can drop it at the chat section, comment section. So let me share my screen right now so that we can look at what is happening on the chart. So while we are looking at what is happening on the charts, you follow through on the analysis. Then, of course, if you have a a trade on any instruments that you want us to look at or analyze, you can equally drop it on the comment section. I'll look at it, I will analyze it, whether you are to hold the trade, whether you are to enter the trade, or whether you are to close the trade. So all of that is inclusive here. So remember, we said we'll give you tips and tricks on how you can navigate the market. So that is what we're trying to do here. So quickly, I'm sharing my screen right now with you guys. So I've been able to share my screen. This is my screen. Can you see my screen? Don't deny me. So guys, check if you can see my screen. This is my screen. So what we normally do is we will start with analyzing the USD index. So please, you can see my chart. Get to the comment section and let me know if you can see my chart. Comment section, real quick, type chart. Okay, Mills, I can see you there. Thank you very much. So this is my chart, and of course, I like analyzing USD index now because of that news on the sale of USD. Selling USD is actually buying the dollar, and of course, selling the euro. And of course, that news came out bad for the euro, so that justified the claim. So because of that news, I had to say, I placed a sell to go ahead and enter sell. Of course, they will continue here. So if you look at this particular index, so this is USD index. So I like looking at this, analyze it, and tell what will happen to the dollar, right? So I look at it, analyze it, and tell what will happen to the dollar. So the type of analysis is called market structure analysis. So I look at the structure the market has built, right? And then looking at those structures, the most important area of the structure are the highs and the lows because they are called liquidity areas on your chart. So liquidity areas on your chart. So the market creates a high and aim to trade higher than that high, or aim to violate the high. Or the market creates a low and aim also to violate that low. I mean to trade lower than the low. So the market creates a high and trade higher than that high, or the market creates a low and of course trade lower than that low. Just 1 second, please. All right, we are back now. So if you watch carefully, this is a USD index on the H4 time frame. So let me zoom into the area. So let me show you where the dollar. Remember, the dollar has been nosediving for some time, right? I mean, it has been falling. But let me show you where it got that shift, right? So if you watch July, August, right? Got into September. So it was in September it got that shift. September breaking into October, that was when it got the shift. So let me show you the shift, the market structure shifts before we continue. So there was an impulse to the downside here, a retracement to the upside. Now, I'm sure you are familiar with this word, impulse and retracement, right? Impulse is the market moving in the direction of the trend. So the trend has been down, okay? So it got another impulse again to the downside because this particular impulse, this particular move went lower than this low, right? Now, so that means it's still going down. Now it violated the high, right? It violated this high. It got an impulse here. So the market trading higher than the previous high on the downward trend is what we call a shift in market structure. So you want to write it down if you're hearing it for the first time. Wisdom demands that you write it down if you're hearing it for the first time, because it is guaranteed that you will forget it. Okay? So on a downward trend, when the market trades above the previous high, we call that a shift. So what is shift? Shift is shift of market structure is when the market trades higher than the previous high on the downward trend. Okay? Because on the downward trend, the market respects the highs and violates the lows. So, okay, you understand that? Let me continue. So this is where we got the shift. This is where the market traded higher than the previous high to form a new high. Then from there, sir, if you can watch carefully, the market starts. So let's use this one. The market started going up, and of course, we are now on an upward trend. So, sir, on an upward trend, your trade bias or your directional bias has to be only a buy on an upward trend. So, if you watch carefully, the dollar has been trending up right from when? Right from 1st of October. So, you don't have any reason to be selling the dollar across Euro USD, across GBP USD, across USD CAD, across AUD USD. Your bias is now. See, you are seeing this kind of move from year to year. For example, let's say the first week of October. Let's say first week of October, we have not seen second week, we have not seen third week. Only first week of October, and you're already seeing this. Sir, your bias should be to be buying. Am I communicating? So let me know if I'm communicating, and of course, you guys are getting value. Your bias will be to be buying. And of course, if you have been buying since, let's say, first week of October, buying the dollar, of course, see, not to be not seeing a particular trade and hoping it will turn in your favor. No, you follow the trend. Okay, you understand that. So let's continue. Let's look at what's happening today. So I've been able to give you the past analysis, right? I call that review, right, of what the market has done. Okay, Mills there. MSS, market structure sheet, or not SMS. All right. So let's look at what is happening right now. So I'll just drop that to 15 minutes time frame. There on 15 minutes time frame, obviously this is an upward trend, right? So the market is going through, the market has put in the necessary retracement. Remember, it gave us what we call relatively equal highs, right? Remember, relatively equal highs on an upward trend is what we call a magnet, right? A liquidity magnet. That means the market will be attracted to it. So that means the next target, or the next target liquidity is for the market right now to smash these highs to form a new high, right? So watch this space. The market is smashing this high. I'm sure it will happen today. To smash this high to form a new high. Why? On an upward trend, it has created what we call relatively equal highs, REH, ROEH. So it is hoping to smash this high to form a new high. So long story short, we have put in the necessary retracement to the downside. Remember, retracement to the downside on an upward trend is the market trying to offer what we call discount, right? Discount. So on an upward trend, the market does retracement to offer discount to the downside. So we have that news, right? That news by 8:30. Also PMI. So PMI is out. Let me check. So PMI is out again. So this other PMI is still on the euro. And of course, it's going to affect. Okay, this other PMI came out good, right? The one for 8:15 came out bad. The one for 8:30 is good, right? So the bad one is from is from France. So France have a bad PMI, which affected the euro negatively. And of course, Germany came out with their own PMI as good, right? So, and of course, you know, it should affect it positively now, right? So that is what we have here. Okay. So nevertheless, the market is still very much where it is. So the market have put in the necessary retracement to the downside. And of course, from here, we hope that to smash this up and of course start trading up. Don't forget, we have our opening price for yesterday, which will serve as a support, right? Support area. So this is support. So I think we have analyzed a USD index. Let's now jump to Euro USD. So real quick, let's do Euro USD. So this is Euro USD, wonderful. So this one came out with a gap, right? So there was a huge gap to the upside. So let's look at Euro USD on the H4 time frame. Obviously, Euro USD on the H4 time frame, this is a big downward trend, as you can see, right? So the instrument has been trading downward, and I want to believe they have been in the positive side of the trend, right? Well, you notice on a downward trend, the market normally goes through what we call retracement, right? So these are the retracement it went through. So this is a retracement it went through. It gave us another impulse again to the downside, right? So the market is trying to go to another retracement again. So this is another retracement it's trying to go through, right? So this retracement, how much retracement is qualified to be a good retracement, right? So 50% retracement, so it's still below my 50%. It's still going down. Okay, sorry guys, I lost you there. The network was bad again, so let's continue. So the market is putting in the necessary retracement. Taking a buy trade is just trading the news, right? It's trading the news, but the news is already out. The trend is still downward trend. So what you may want to do is to wait until it gets to maybe above 50% before you can place a sell, right? So if you have a sell already on, you may want to leave the sell running, just like I have a sell here, right? Which was in profit from that first news, but now it has moved up. So you may want to wait until, if you have not placed a trade yet, you may want to wait until the price trades or rock above my 50%, touching my 62%. So this area becomes our area of interest, right? For a sell. This area becomes our area of interest for a sell. This area. So if you're on your chart too, this area will be a good area, okay? Now let me drop down much to 15 minutes time frame. Let's look at what we have there. So on the 15 minutes time frame, so remember this is the area I already marked the 4 hours time frame, right? So looking at 15 minutes time frame, also looking at 4 hours time frame, we call that a top-down analysis, which is good. That means you're considering both a smaller time frame and a higher time. So, sir, if the market are on a massive downward trend, if the market drops inside this area, it's a good. So let's look at GBUSD right now. So guys, let's look at GP right now. GBUSD, where's GBUSD now? So this is GBUSD. Let's do some more analysis here and understand the direction the market is going. Okay. So that news on the euro also affected GDP positively. So, and of course, we are seeing some movement to the upside. This movement to the upside is healthy for the downward trend. I hope you know that. Very healthy, right? Remember, before moving to the upside, it has created what we call relatively lower equal lows, right? So which it will be looking forward to smash, right? Looking forward to smash it. Just like yesterday too, and then of course, day before yesterday, we saw this relatively lower equal lows, right? And what happened almost immediately? The market smashed through it, and of course, start trading to the downside. So this is only a retracement right now. So you still consider a retracement, not a change of trend. So the market is still going through what we call retracement, right? And retracement is healthy for a downward trend. So the areas you should be looking at is the opening price of yesterday. That's somewhere around 1.3080, right? So 1.3080 is around the opening price of yesterday. So around this area. So these are the opening price of yesterday. So the next area that will affect the market or the market will find difficult to break through to be around this area, okay? Even though right now we are rocking a mini support, sorry, mini resistance, right? So the market is right now at a mini resistance, okay? So if you look at this on a H1 time frame, this is actually a downward trend, right? A downward trend that is going to a massive retracement, right? Don't forget, your first job is to identify the trend. Your first job is to identify the trend. So this is it. So this is a downward trend, impulse to the upside, and then of course massive impulse again to the downside. For this downside, it gave us relatively equal lows. So clearly we can tell, because making profit on this market starts by telling yourself the direction the market is moving. So this is actually a retracement, right? But if you put in your Fibonacci, you will see clearly that this retracement has gone past 50%. It's somewhere around 61.8 to 70% retracement. Now, you can trade a retracement and still make profit for yourself, but then the area where the price has to break through before you can say the trend have shifted is actually this high, okay? So the market has to trade above this high before you say we have shifted to the upside. So the market have to trade above this high before we have shifted to the upside. So right now, what we have right now is actually a retracement to the upside. So the market is still going through this retracement, and of course, if you drop down to 15 minutes time frame or even 5 minutes time frame, right? If you drop down further, let me show you where you would have picked up an opportunity to scalp this retracement. Remember, on this 15 minutes time frame, this is impulse to the downside. Of course, this is a little retracement to correct the impulse, right? Then, of course, this area where it's impulse to the upside, it gave us a retracement to the upside. That becomes a high, right? That becomes a high. Then, of course, if on this lower time frame, 15 minutes time frame, so on this lower time frame, 15 minutes time frame, we saw where the market actually shifted, right? Now on 15 minutes time frame, take note. It traded above this high, right, to form a new high, right? So after that, it dropped again to test it. So this is where the buy would have come in, right? This is where your buy would have come in. Now, this analysis, you can copy and paste into future market structure and, of course, use it once you see this kind of movement. So this is where it broke this high. So that is where one would have taken advantage of this movement to the upside, right? So it broke this high. That's a shift on the 15 minutes time frame. Broke that high, then came back for a retest into this area, right? Now, for this is where the spy would have taken place, and of course, you would have right now been you would have been basking on how many pips profit now? Somewhere around 30 pips profit, which is manageable, right? Now, but then looking at the bigger picture, this is still considered a retracement. So if you're buying, if you have a buy right now on GBP USD, it is considered that you are buying and you're making profit, but then don't stay long on that buy, right? Don't stay long on that buy. Quickly adjust your stop loss and protect your profits, because as long as we are still trading below this low, this structural low, means the market is still largely on the downward trend. You're only taking advantage of the corrective move to the upside. I hope you understand that. So when are we going to place our trade? Wait until the market, right? Now, these areas I've highlighted are areas that the market can give us sign that it's about to go down, right? What is a sign? Sign is actually what we call a shift in the market structure, or it can show us what we call change of character, where the market starts printing lower lows and, of course, we start placing our set. So if the market starts printing lower lows, now this is 15 minutes time frame, you can see it, you can see those details on a much lower time frame. That will be on maybe a 1 minute time frame set, or even 15 or 5 minutes time frame. So you see the market start printing lower lows, right? That is when you are jumping with the set. This place and, of course, this place. So this analysis is market structure, right? The market start printing lower lows, then that's the best time to jump in. But for now, you don't jump in on a moving train. So you stay out, stay clear. So we have done GP USD, Euro USD. Let's look at what gold is doing right here. This instrument gold, a powerful instrument here that you have to trade. You have to trade it to. So gold is trying to recover from all of those losses of yesterday, right? So yesterday is considered a bearish day for gold, and of course, gold is coming from a very strong upward trend, right? Which has been going on for weeks and even for months. So yesterday was the day it didn't fit to have the correction, right? So we saw the correction yesterday, and gold is trying to bounce back, right? So gold is actually not for small money, right? So that means gold is actually for big money. So if you look carefully what happened to gold yesterday, really, in this business or in life, we live life forward, but life can be understood backward. So if you look back, you can see that gold was very hungry for more liquidity, right? So it has to go through all of this retracement, clearing all of these stop losses And of course, it took out this significant low here, right? So that means it has taken out the the orders that are lying around this area. And of course, that would be a stop loss order. Like, so it has cleared all of those stop losses here, right? And of course, mainly it did that. It gave us what we call a spinning candle. And this spinning candle is actually being confirmed by a bullish candle, right? So the spinning candle was confirmed by a bullish candle, as you can see clearly. So after the spinning candle, we had a bullish candle, right? That even closed at the same higher than the opening, higher than this the top, right? A bit higher. So from there, we saw the market start moving upward. So whenever you see this spinning candle like this, right, it's actually an indecision candle. So you wait for a confirmation. Confirmation means you should follow a bullish candle should follow it to confirm that it's going up, or a bearish candle should follow it through. Okay? So in this case, we have a bullish candle that came afterwards, right? Two bullish candlesticks. Of course, it has confirmed that gold has returned back to the upward trend, right? So you can buy gold right now, or you can wait for a retracement on the lower time frame. For those that are doing swing trading, long-term trading, gold have resumed back because we have seen that confirmation there using those candlestick pattern. So gold have resumed back, right? Gold have resumed back. We have seen those confirmation there. So on the 15 minutes time frame, you may want to wait for a retracement before you can enter gold, right? But for the aggressive trader, you may want to jump in immediately, right? The confirmation will be for gold to drop down further to around this resistance term support. Then you can do your buy from there, okay? So you may want to wait for gold to drop down further, then before you can start buying from there, of course, going up. So gold has actually resumed back from a bearish day of yesterday. So guys, you have question, please drop it on the chat session. You have instrument you want us to analyze. So also drop it there so that we can look at it. Now let's look at US 100. Yeah, so somebody asked for US 100. Polanos. So let's look at US 100. Like you are in love with GBP CHF. So we also look at GBP CHF real quick. Olatunde, I can see you there. You're in love with T40. Let's look. Okay, let's start with US 100 from the first one. The first we got there. So US 100 right now. So we are back on US 100. This is US 100. Yeah. So the first thing we normally do is to analyze the market first on the higher time frame. So this is H4 time frame right now. So largely enough, again, this instrument is still on an upward trend, right? This is still upward trend though. So this height, so the market will still be looking at to smash through these heights. So the market will be looking at to smash through these heights. So let me show you the heights. So it has created several highs here. So those highs will be very attractive for the markets. So, so for today, US Sunday will still be going up to smash to this high, being that it has done enough retracement to take out the liquidities around these lows, right? It went further into this fair value gap here. So this is a fair value gap here. So if you notice, it dropped up until this fair value gap. So let me zoom in so to make it clearer and bigger. So fair value gap is a three candlestick pattern, right? That that will create a void, right? A liquidity void at the middle candlestick. So this is a first bullish candlestick, second bullish candlestick, third bullish candlestick. So between the high of the first bullish candlestick and the low of the third candlestick, there is a gap there, right? So there's a gap. I don't know whether you understand. First bullish, second bullish, third bullish. Between the high of the first bullish candlestick and the low of the third candlestick, there is a gap there. So whenever there's a gap there, we call that a fair value gap, right? So, and the market came into that void. So you can see it dropped down massively into that void, right? To tap it. So it's as if it forgot something. It came back to come and collect it. Watch you. We got the same thing here. There's also a void here. The same thing happened here, right? Watch carefully. Because if you know this, you always use it to trade. First bullish candle. So what I'm going to say, this market has dropped into this area. So it is also zooming off. So where is target? This high becomes our target, right? So is it late for us to enter? Let's drop down to 15 minutes candlestick and look at it. So knowing the kind of instrument US 100 is, right? So it is not late, just that we are rocking what we call a local resistance here. So the market is rocking a resistance. By resistance, you just look at the left-hand side of the chart. So drag into the future. So that's the resistance, right? So once this resistance is taken care of, then we are good to go. So that means if the market trade above this area, then you can start. So if you can just screen grab what I'm showing you, right, and follow it through much later. Or you can check our YouTube channel. Remember, we are also streaming this live on YouTube. You can check our YouTube channel and watch it much later. Once the market breaks this area, then you should dive in with the buy, right? So my bias is a buy. If you want to know my bias. So my bias is a buy. Once the market breaks this area, so you can see I've highlighted the area. Okay, so if you're following this up using your laptop, so you should be able to show as big as this. Even your phone too should show something like this. So once the market breaks this area, then of course we are targeting this new high, right? This next high. So the market should be able to reach out to this high, right? So that's for US 100. Then the next request I got is GBP CHF, another wonderful instrument there. GBP CHF. So let's look at it very quick. So GBP CHF, another nice and wonderful instrument. So GP is trying to recover most of its losses, right? So when you see something like this, Most times for you to call a particular instrument that we should analyze, possibly possibly you have a trade on the instrument, right? Most persons, before they can call Mr. John, if I can see you there, drop your question at the chat session. Most times, before most person come up with an instrument like this, possibly they must have they have a trade on it, right? They have a trade on it. So don't be sentimental about your trade. Your trading will win money. So you have to be very, very analytical. So this day was a bearish day. By bearish day, I mean the market opened higher and closed lower. That is Monday. This week, Monday was a bearish day. The market opened higher and closed lower. Tuesday was a bearish day, right? The market opened higher and closed lower. Wednesday, yesterday was a bearish day. The market opened higher and closed lower. The market opened higher and closed lower. Then today, you can see that it's trying to recover from those moves, right? So usually when a whole week, Monday, Tuesday, Wednesday, or even Thursday is bearish, between Thursday and Friday, or even Friday, the market will try to do some recovery, right? So this is big impulse to the upside. Remember, it has gotten to the opening price of yesterday, which that opening price, there will be a lot of orders there, right? So it will act as a resistance for today. So GPUSD right now, so GPCA right now is working a resistance. So guess what will happen to it? The resistance will act on it. The resistance will push it downward. Then, of course, that push downward just pushes to a premium price, to a discount price rather, that it will need to push upward. So that push downward will just be around this area. Will just be around this area. So if you want to buy this instrument, don't buy immediately. Wait for the market to retrace into this area, right? So because the market retracing into this area is the market trying to observe that resistance up there, right? So around this area, you can do your buy, and of course, you target these highs, right? So from here to gather more momentum, of course, it's a discounted price. To gather more momentum to trade higher, right? So this is the analysis on GBP CHF. This is the analysis on GBP. Don't enter an instant buy, don't do that. Wait for a retracement before you can buy. Now, but if miracle happens, miracle always happens on this market, and it breaks through this area without observing it. And of course, this is GPCHF. All of the GP currency pair moves like gold, very, very fast, and moves very well. So it may just continue moving upward. Otherwise, you wait for the market to trade into this area, please, right? So wait for retracement. That retracement might take some time because all right, so any other question, please? I think it's already 9. Would like to draw the curtain here. I'll drop my number if you have further questions. Okay, I'll drop my number. So I don't know if I can take that order request. So so guys, I've been able to I was trying to drop my number there. So 090 26 2626 4507. So Emmanuel is my name. May the market be with you guys. So this number you can use this to chat, right? Chat me up, please. Okay? Because most times I might just be in class. Chat me up. Drop your chat, drop your message. Thank you very much, guys. Bye for now.